So could stocks drop 20% or more in 2025? Maybe it has something to do with a Trump policy, maybe it has something to do with AI stocks bursting their bubble. Either way, let's talk about what could cause a bear market this year and maybe a couple things you might be able to do about it. So when we talk about bear markets in technical finance jargon, we're talking about when the stock market drops at least 20% from its highs. So we're not talking about the normal fluctuations that kind of are happening all the time. We're talking about an elongated and serious decline. And those are pretty rare. In the last 50 years, the S&P 500 has only had 6 technical bear markets, and 2 of those stocks rebounded very quickly, regained all of their losses in only a couple of months. So it's only really been 4 elongated bear markets in 50 years. So quite rare. Most of those bear markets did come around recessions. So a good place to start is to say, well, if we're asking what might cause a bear market in 2025, we could say, well, what might cause a recession to hit? And right now there just really aren't any signs of a recession at all. We've got solid job growth, we've got strong consumer spending, business confidence seems to be on the upswing, bank lending is expanding. These are all things that tend to turn down when the economy is getting weak. So while recessions can come on suddenly, we're not really seeing anything like that right now. I've recorded some other videos about Trump's tariff policy, and that's something I'm, a little worried about if it were to be implemented universally. Now, as we're recording this in late January, things could obviously change, but so far Trump hasn't implemented any tariffs at all, and it appears that this is at least giving me and some other Wall Street analysts some confidence that the tariff policy will indeed be more targeted. It'll be more of a negotiation tactic. Now, look, even targeted tariffs could have some negative effects on markets. We'll talk about that in a little bit, what you might be able to do about that. Before we get there, let's talk about the other big risk that we see to stocks in 2025, and that is the possibility of some kind of shakeout among the big tech companies. There's been a lot of enthusiasm about artificial intelligence the last couple of years, and this has driven some spectacular gains for a really small handful of big tech companies. That would include names like NVIDIA and Microsoft and Amazon, etc. So what maybe something comes along that challenges the dominance of those companies, or maybe cools excitement around AI. Just the other day, there was an announcement from a Chinese company called DeepSeek, and they said there's been a breakthrough in their AI model that doesn't use the huge, expensive semiconductors that the existing incumbents are using. And if they're using less expensive technology, maybe that means that all the spending that some of these big companies that we all know is not going to be effective. Maybe it's going to have to go a different way. So look, who knows? This is way too early. There's always disruption within technology. These tech firms have dealt with it before. They've learned to pivot and whatnot. But this is at least an example of how you could get a disruption that changes the kind of dominance in AI that has led to these huge gains for some of these companies. So what can you do about all of this? Well, the first thing I would do is don't go to cash, okay? Remember that I said in the beginning, bear markets are very rare. And so if you spend all your time trying to predict bear markets, you're gonna be wrong a whole lot, and you're gonna miss the upside that stocks tend to have over time. And in particular, conditions beyond some of these couple little things we're talking about are pretty good. So I don't think there's a particular reason to expect a bear market this year over any other year. But that doesn't mean there's nothing that you can do to build in a little bit of defense. A couple things we're doing among many is one is we're underweight emerging markets countries. So if Trump's tariffs do wind up targeted, good chance that many of the targets will be emerging markets countries. And these are countries like China, but also includes a lot of the other big Asian exporters, would also include Mexico and the rest of Latin America. And these are countries that tend to rely a lot on exports in order to fuel their economy. And so it could even be a scenario where tariffs don't cause much an effect on the US economy, but does cause a pretty meaningful effect on those emerging markets countries. Now, what you don't want to do is just sell emerging markets and buy the S&P 500, because that puts you right back in the teeth of the other issue, which is kind of these big tech companies and could they be vulnerable. Now, listen, we still have a pretty healthy allocation to large cap companies, and that includes these big tech companies, but we are a little bit underweight, and we'd rather than be overweight those tech companies, we're overweight mid-cap companies. We think mid-cap could benefit from either a broadening of earnings growth, so if more companies are able to grow earnings relatively quickly, or if tech stocks were to take a stumble, just being a little bit out of that might provide you with some kind of protection. Those are two examples of which we have several where you can play a little bit of defense without being completely out of the market. And that way you might be able to participate if the market has upside, while maybe also having a little bit of defense should the market go the other way. But hey, what do you think? Are there other risks that I'm not talking about? There are other ways that you think would work on playing defense? Throw a comment in the comments section. I'm happy to respond to anything I see down there. And if you like this content, we'll be coming with more commentary on the market, on the Fed, on the economy, on anything going on with Trump policy on this feed. So hit subscribe. You'll be the first to know when we have a new video out. We'd love to see you again.